Welcome, everyone, and thank you for attending the first installment of our Risk Revealed webcast series, COVID-19 Financial Crime Risks, Are You Prepared for the New Era? My name is Stephanie Radcliffe, and I'm your host today. Before we begin, I'd like to cover a few housekeeping items. First, some technical points to note. There is no dial-in number for audio. Please use your device's sound and plug in your headphones to listen to the webinar. Click on the media player on your screen to enable sound and ensure that Flash is enabled on your browser. If the slides get stuck, please refresh your browser or press F5. At the bottom of your audience console screen, you'll see a toolbar with multiple widgets you can use. If you have any technical difficulty during the webcast, please click on the Help widget. It's a question mark icon, and it covers common technical issues. You can expand your slide window by clicking on the Maximize icon on the top right of the window, or by dragging the bottom right corner of the slide area to expand. Now, at the top right corner of your audience console is the Q&A box. Please submit your questions in this box. Our presenter will try to answer as many as they can during the last 5 to 10 minutes of the webcast. But if a fuller answer is needed or we run out of time, it will be answered later by email, and we do capture all questions. Now, you can also register for part 2 of our Risk Revealed webinar series that will take place on June 25th from the box at the bottom of the audience console. There's also a webinar coming up on May 27th on what makes an effective EDD program, which is hosted by our partner Caseware. The link to register for that webinar is on the resources list widget. And finally, the link to the recorded webcast, copy of the slides, and other resources will all be emailed to you after the conclusion of this event. You can also access the webinar on demand using the same audience link that you used today. Now I'd like to kick off introducing you to our speakers for today. Kevin Bogdanoff is the Performance Director of the Americas for Refinitiv. Matthew Eckberg is the Senior Policy Advisor for Regulatory Affairs at the IIF. And Andrew Simpson is Chief Operating Officer at Caseware RCM. Now, without further ado, I'm going to turn it over to Kevin to get us started. Kevin?
Hi, Stephanie, and hello, everybody. Welcome to the inaugural Risk Revealed. We're really grateful to have you. My name is Kevin Bogdanov, and just on a personal note, I wanted to extend a sincere appreciation to all of you that are joining us today. I hope that you're well. I hope that your families are safe and healthy during this difficult time. And also wanted to acknowledge the fact that for many of us, we're stuck in front of a screen for too many hours every day. And so the fact that you're spending your time here with us right now to invest in your learning, and you're doing that with Refinitiv and our valuable partners, I'm really glad to have join us, including Andrew and Matthew. We really appreciate it. So welcome. Glad to have you join us, and look forward to engaging with you today to look at the changing financial crime ecosystem. So, as always, I think it helps just to take a step back, think about where we've come from, and reflect on what that means for us now and moving forward. And we're going to cover a lot of ground today, from the virtual operating environment and the operational realities behind this current disruption, right through to what it means from a policy, regulatory, technology and programmatic perspective. So we're going to cover all of this and more. And Andrew and Matt, I'm really glad to have you, because I think you both bring such different perspectives on the topic from different vantage points, but ultimately very complementary ones that really allow us to flesh it out. So without any further ado, we're going to take a step back and think as to where we've come from. And I think before we look forward, it's really pertinent, it's really important that we do so, just to recognize that sometimes we get lost in the chaos of this very moment. And we forget how much change has taken place in the prior 12 months, as 2019 moving into early 2020 was a confluence of so many factors that have really upended the industry. So if we start there, I think I'll kind of turn to you first, Matt, just to kind of walk us through potentially the regulatory policy backdrop as we start to think about what that then means for now and moving forward. So could you maybe walk us through some of the key developments that sort of led up to this time?
Sure, that's great. And Kevin, thank you very much for having us here today. We're always very pleased to join Refinitiv on their programs, and very, very pleased to be here discussing this very timely topic. So as background, I think it's a good question to sort of open the session with. It's certainly been a busy time for AML CFT policy and the wider discussions around financial crime risk management over the last few years, really leading up to 2020, both at the international and the regional level. And I think this can be seen to be in part driven by a closer political and regulatory focus on financial crime, particularly in relation to de-risking and correspondent banking and the impacts on cross-border remittances, starting as far back as 2013, 2014. This really brought sharper focus of the G20 and the Financial Stability Board in this area. And indeed, more recently, the number of very public issues relating to compliance at financial institutions and in oversight gaps in certain jurisdictions that have led to regulatory action and have made quite a bit of news. So I think it's important to take the question in sort of three buckets. So activity at the international level and a focus on effectiveness, activity at the national and regional level, and also a bit of a focus on technology. So at the international level, the agenda obviously is really driven by the Financial Action Task Force, the FATF, which shapes international standards through recommendations and through guidance and evaluates countries through their evaluation processes. And it's been a really active period for FATF over the last several years. And if we look just at the last presidency, the US, and the current presidency, China, they've really focused on addressing AML-CFT concerns for virtual assets, becoming the first standard-setting body to address something in that area, a focus on the illegal wildlife trade, a focus on technology and digital ID, and before that on other issues, including information sharing and correspondent banking, among other things. So the German presidency of the FATF starts later this year and will be the first two-year presidency of the FATF. And though we don't know what the priorities are yet, it'll likely carry on with some of these issues, but also be heavily influenced by the COVID situation, which I assume we'll discuss a bit later. And I think one of the most important things to consider in the context of the FATF and the time frame leading up to 2020 and all the work being done on AML-CFT is really a sharp focus on effectiveness in countries' AML-CFT regimes. So the FATF really assesses the extent to which a country achieves a defined set of outcomes that are central to a robust AML-CFT system and analyzes whether a country's legal and institutional framework is producing expected results. It's the first standard-setting body to measure this from an effectiveness standpoint. And that's very important because it's not just about setting standards in AML-CFT, but also about ensuring those standards are implemented consistently and that countries are effective in the end result of stopping cross-border criminal flows. But unfortunately, the reality is that there are deficiencies in the effectiveness of countries' AML-CFT regimes, and that's been more widely discussed on the jurisdictional level and has been really one of the biggest issues of the last several years that really needs to be discussed. How do you make a more effective regime, both from a public perspective and also from the private sector perspective? So just two quick examples from a regional and a national perspective on what's being done here for AML-CFT and to increase effectiveness. The European Commission published a series of reports last summer which lays out issues for the European Union AML-CFT framework, including a lack of a central AML authority and a lack of consistent application of EU rules governed in this case by directives and not regulations in member states. And these gaps have, among other things, contributed to a number of the high-profile incidents of financial criminality across the Union that we've seen. So the EU has started to address this just this month with a roadmap on structural changes for AML-CFT rules and oversight. And I think as that process develops, the COVID situation is certainly going to influence the outcome of changes at the EU level. And just a second example, in the US, there's also been a lot of a closer look at the Bank Secrecy Act, for instance, and there are bills now pending in Congress that look to address gaps, including gaps in the disclosure of beneficial ownership information. So a lot of work on international standards, on jurisdictional reform, on effectiveness. And I'll just lastly mention one of the other major areas of focus in the last several years has been the use of technology, so RegTech in this area, including digital ID, which I'm sure we'll talk about more, machine learning, artificial intelligence, and this has really been a big part of the discussion on how to increase that effectiveness in the system. And I'm sure that will continue and become more and more prominent as we respond to the COVID situation. So anyways, that's just a bit of a background really in a lot of the space leading up to March of this year. It'll likely get even busier now with the COVID response, but I'm sure we'll get into that a bit more later.
That's really helpful, Matt. Thank you. It's really important to start there because many of these megatrends are hardly behind us. In many cases, they have been disrupted, sure, although in many cases, they've been heightened or potentially accelerated because of the situation we're currently going through. And so I think it's important to keep that backdrop in mind. I take your point and kind of use as a segue your comments around technology because given the sharp acceleration in applications of technology, which speak not only to efficiency but also effectiveness, I suppose, on both dimensions or both axes. We've certainly seen that technology has been a major disruptive force in the context that we're currently in. So Andrew, I think I might bring you in here. Could you maybe speak or sort of walk us through this to some extent from a technology standpoint, from the perspective of some of the disruptions that we've sort of come from in the prior couple of years? What are some of those key megatrends that we should observe as we start to think about the current framework?
Okay. All right. Thanks, Kevin. Thanks for having me presenting with you guys today. And I was thinking about it prior to coming on, and I was saying the last time that you and I presented was in New York, and we were talking about all these different trends and everything, and then COVID hit, and the world is different, right? So, but what were those technological trends, and what were the kind of disruptions that we were seeing? A big part of what we were talking about at the time was digital transformation in traditional FIs, and the type of transformation that you saw happening and being driven largely through fintechs. And so what I'm going to do is just talk about, like, the specific ones that were driving a lot of this change and how this was being impacted. And later on, we'll talk about how it changes now with COVID, if at all, right? So many of our traditional financial institutions, they were really driving and trying to get digital transformation projects going, moving things faster, things being done quicker. So, for example, you'll have a situation where a bank, they want to offer a new product in the market because there's a specific opportunity to disrupt their competitors. And so they said, okay, let's go ahead, let's do it very quickly. You have 4 weeks to do this. And so more of these banks are trying to look at, how do I do that with new methodologies, new approaches, being very agile and so on, as opposed to the traditional approaches where if you went to your IT department, they'll tell you, to get the new servers or to get the new functionality is going to take you 6 months. Right, so that wouldn't work anymore. So now they were looking at different ways of doing that. A big part of that was the shift to cloud computing, and we're going to talk about cloud computing later on in the presentation. Not so much so from the context of outsourcing your internal IT, but to look at the real synergies and opportunities that the cloud present. Obviously, in the AML KYC space, big drivers around AI and machine learning, even in terms of digital identity and identity verification. How do we handle that? Biometrics, the use of AI, and a lot of those APIs that exist in the cloud. Machine learning being used extensively in terms of transaction monitoring and so on. And when we talk about post-COVID, we'll talk about how some of those machines turned out not to be as smart as we thought they would have been with what happened, but the evolution as well, and the significance of compliance in the overall digital footprint of businesses. Not just saying, we have some compliance guys that are always bothering us about things in the background, but having the compliance activities primarily around KYC embedded within the day-to-day activities of businesses. So no more was it a situation where you would look at a customer after you have onboarded them. There's a big change and a shift to looking at those customers as you are onboarding them, or screening your payments as the transaction is going through, and not looking at it after the fact. So for that to happen, what would happen is you would have these technologies that would be engaging the business in this whole culture of compliance, as opposed to just having everything being done by the compliance department. So that was a big change driven by workflow automation and business process automation as well. And the next big thing that you saw was the use of APIs, and I'm going to touch on that later on, but that was primarily to drive the rapid deployment of compliance capabilities. Instead of waiting 18 months for it, you can get it in 2 weeks kind of thing. So that was what was happening. And if you have been to any ACAMS trade shows in the past 2 years, one of the two big topics that were really being talked about a lot is virtual currency and cryptocurrency, or however you want to talk about it. And the next thing is the complexity of navigating what was happening in terms of cannabis-related businesses. So those are the things that were happening prior to COVID hitting us.
That's really helpful, guys. Thank you so much for framing that up, both from a policy and technology programmatic perspective. It's funny, a lot of what you're describing would speak to enhanced resiliency. So if businesses had adopted or enhanced a lot of these motions, presumably the disruption would have been lessened. But obviously, in many cases, the ecosystem that we're operating in, has fundamentally changed. So I suppose we're going to kick off our first poll here, and I'm curious from everybody to get a sense from you, how COVID ready were you? And obviously nobody could see this coming. It's completely unprecedented and really a black swan event. But, how quickly did your program withstand the unprecedented disruption? So, for example, were you able to easily flex and therefore have minimum disruptive impact? Were you in a position where you had to scramble, but were able to adjust in a reasonable manner to the new operating environment? Or are you perhaps in bucket C, which I've heard many times, and it is understandable. It's been challenging to adjust to the new normal, or perhaps you're not sure. I think we can only speculate. I've heard probably answers at all end of the spectrum, and Andrew and Matt, you probably have as well. But we're curious, kind of, as we think back and as we sort of transition into what's different, how you as a collective have experienced some of these things. So we'll give you guys a couple more seconds just to kind of walk through. Any speculations, Andrew, Matt, as you kind of as we sort of approach the answers?
I think you'll have a lot of persons that would, a high percentage that said that they were able to kind of transition to remote working relatively easily because a lot of the systems that they should have been using would have facilitated that, more from a technology standpoint, but not sure from an operational standpoint.
Mm-hmm.
Yeah, I think so. We've done quite a bit of work in this space as well in terms of operational resilience and operational continuity. And so the banks really have put in place, planning for a long time in terms of disruption from IT, from cyber attacks, various things. I think this has been a real test in terms of how things are actually working from a theoretical continuity plan to what becomes a reality. And from what we've heard, I think the transition has been fairly effective. And it's also going to be interesting to see where you can take out best practices from this experience. If this ever happens again, God forbid, but another type of crisis where we can learn lessons from this to make it even easier to transition.
Absolutely. And so you'd have to assume that would be the case. And so if we do kind of pull up your responses as a collective, you agree or share those sentiments that many of you were able to flex and adjust. And for a number of you, there was some scrambling, but you were able to adjust relatively quickly. So that does speak to that resiliency. And I think it speaks to the investment and the ongoing sort of continuity planning that has been a function, not just of adoption of technology, but also a function of some of the heightened risk and security sort of environment, if you will, that institutions are operating in. So this is great, guys. And I think we could use this as a segue as we think about kind of what's different, what's changed. But very helpful feedback. Thank you. Okay, so we're in a new world now. It's good to look back, but if we sort of think about now what's different, the reality is that quite a lot's different. So COVID has been incredibly disruptive, and it's really changed the landscape for us from a risk perspective, from a typologies perspective, and obviously we're starting to see some tone around that in the industry and the regulatory environment as well. So I might start with you then in that case, just to kind of talk us through this, Matt. What are you seeing in terms of the changing financial crime landscape? Maybe touch on typologies, just some of the themes, if you will, that are emerging from this.
Sure, that's great. No, thanks very much. So it's a very interesting question, and it's something that we've looked at quite a bit. So in April, we published a paper on financial crime and the COVID crisis, and it's available on our website. But fundamentally, we addressed that paper in three areas. One, updated cases and typologies that have arisen related to the crisis. Two, the operational issues related to the crisis, and then more broadly, updated recommendations on cooperation and international response to the crisis. So the paper, it's part of a broader exercise really at the IIF to address crisis issues holistically. So we're looking at this from a prudential macro risk assessment perspective, including policy responses related to bank capital and liquidity issues, and also non-financial risk issues, including issues that point around business continuity and operational risk. So briefly, this paper on financial crime was put together with input from our members, banks, insurance companies, as well as the public sector and law enforcement. And it was interesting to do because it did pull out a number of new characteristics and typologies for crime that really were accelerating in just the early days of the COVID crisis, as people were having to adapt to a new means of living, including how criminals had to adapt to that as well. So just a few examples of some of the typologies that we sort of pulled out. There have been increases, obviously, in changes in cyber incidents with phishing campaigns, ransomware, malicious apps. Fraud, I think we all understand, linked to and counterfeiting linked to personal protective equipment has been quite out there in the news and growing, and also other COVID-related issues such as the rise of fake charities trying to rob the vulnerable now that they're might be a bit more scared given the circumstances. There's also been a shift in human exploitation, shifting further online due to social distancing rules. And there's also been investment by illegitimate actors in legitimate businesses to hide assets by taking advantage of economic hardship. So if a restaurant is faced with closure and financial issues, is there a possibility of more investment there to hide illicit proceeds in order to prop up that restaurant in times of distress? Obviously, these things, new patterns, really have to be sort of untangled. And of course, there's also the broader issue around corruption, misuse of public funds linked to the pandemic, and abuse of stimulus loan programs. This is something very much has to be kept an eye on if there are actors that are either government actors or private sector actors that may be making use of these funds that should be delivered to people that need them, but are not. So we know law enforcement, the banks are all looking very closely at this. We've had good interaction with Interpol and with Europol on some of these typologies. So something I think we'll build on to try to raise awareness of what's going on and how the situation is evolving from a criminal perspective. The second new issue, obviously we spoke to it briefly, was around operational aspects of financial crime risk management. So this shift in working from home and the general issues for business continuity. Obviously that was raised in the poll question. So in this regard, we pointed out that clear communication between law enforcement and regulators and the banks was really critical, and that clear regulatory guidance in line with the risk-based approach, which did take into account the necessary flexibility, was important. And this was indeed amplified for some of our smaller and emerging market banks, which may not have the resources to shift as quickly to the new world order, as it were. And then operationally as well, financial crime obviously remains a top priority for financial institutions. But banks need to adapt to the changing risk environment and to the new way of working. So that does have implications for onboarding clients and the maintenance of existing clients. So there can be a need for a certain level of forbearance on regulatory reporting or things like that, things like on-site visits that has to be sort of rethought in a social isolation context. So quite a number of things from an operational perspective as well that do have to be rethought, but banks are still going to make this a top priority in terms of their working to ensure that the system isn't misused by criminal actors, and they will adapt to learning these new typologies and characteristics and dealing with them in coordination with law enforcement. And then I think the third area we'll probably touch on a bit later, but that goes into more of the policy response related to the crisis and how there needs to be that public-private sector cooperation and how critical that is, as well as domestic coordination and international coordination on the response. So all of those things from new typologies, operational activity, and then that dialogue with the public sector, all of those things I think have changed in certain ways for the crisis, and they'll have to do some adaptation to that.
That's really helpful. Thank you. I do want to note briefly that we are getting a number of questions coming through the Q&A. And so we're not going to be able to get through all of them, I suspect. But as we do go through the session, and we'll definitely leave some time at the end, we'll try to get through a number of them. And then if we're not able to do so today, we'll definitely make every effort to go through them offline and come back to you guys to make sure that we can address those questions or concerns. Andrew, I want to bring you in here because I know you'll have some perspectives on this as well. Just having seen the kind of programmatic output and some of the changes or perhaps, or otherwise that you've seen. So can you maybe jump in here and give us some perspectives around what you've seen from a changing landscape perspective?
Yeah, I think Matt covered a lot of it, but the scams are really stepping up, and persons will be saying, well, why is that happening? And I think it's just the way that our social landscape that has changed that has presented some opportunities for criminals. So if you think about it, before, if I sent a spam email to 100 people and I said, hey, you need to reset your Netflix password or your online banking password or something like that, your hit ratio would be relatively low. But now when everyone is locked in, everybody is now watching everything online, streaming online, so your behavior has changed, and that has also created certain opportunities for them. Beyond that too, if you think about how your employees worked before, they worked in the financial institution, many of them would be in the office, and there's a specific way that they work and operate. You take them out of that situation, you put them home, the kids running around, the stress of the whole COVID situation, uncertainties abound, and then you create this perfect mental situation for persons who are normally not susceptible to certain type of attacks now become very susceptible. And so the type of social attacks and social engineering, and that's one of the things that has become quite predominant. Fear is also driving a lot of things. So as Matt pointed out, and he talked about just scams around investment opportunities. So stock markets all around the world collapsed. A lot of people pull their cash out. What are they going to do with it? So then you come and you say, hey, I could give you an opportunity to earn like a 20% return. That's like amazing, right? Too good to be true. But depending on your mental state, you might still get trapped into that. But in terms of the AML programs, one of the bigger challenges that we have seen with some of our customers is that the behavior of their customers have changed. So if you think about, I'm a bank, I operate primarily I have tons of restaurants as customers in New York. You've been banking them for years, and there's a specific way in which these companies operate, and then all of a sudden the behavior completely changed. Now, your transaction monitoring systems are probably configured to detect this abnormal behavior, but then that's not abnormal anymore. That's now the norm. So frankly, you have to look at it the other way around, which is if I'm banking 2,000 restaurants and almost all of them show a sharp decline in deposits and their activities have completely changed. And then I have 1% of them that operates the exact same way. The cash inflows are the same, the deposits are the same. The anomaly is actually the other way around. So those are some of the things in terms of looking at your transaction monitoring systems, how you're doing that and how you're coping, and recognizing that the new norm is now actually quite abnormal. So how do you adjust for that? That has been one of the challenges that we've seen as well.
That's really helpful, guys. We like to be cheeky here and test you. So rather than asking the audience for their opinion and then having you agree, we like to ask you for yours first and then ask the audience. So we're going to do the same thing again. We're curious to see if you have experienced changes in your program from a risk typology perspective, or whether you may have seen a change in volume of SARS, STRs. I think it's fair to say that the changing dynamics are real, and that impact that you collectively described has been very significant for a number of industries, whether it's the change in traffic to storefronts, to travel, to the entire sectors, and the nature of movement of people and flows and business, certainly going to upend the nature of those typologies. But we're curious where you landed. So did you A, see no change, B, modest change, or have you seen significant impact, with again D being not sure? This will be our last poll, but we're just curious what you think, guys, and what you've experienced. So give you a couple more seconds and we'll flick to the answers. Okay. So we've seen modest change, 41%. Okay. So it's not necessarily the case that it's fundamentally upended. your risk environment, but you have definitely seen a notable change. So I think that does reflect your comments. So yet again, guys, you're on point, which is wonderful. All right. So let's start to get a little bit closer into that discussion that we were exploring earlier on about the virtual operating environment, about the change it's going to have on our programs. Andrew, I might have you kick this off to take us through this. But can you maybe walk us through what the impact has been on that VOE or virtual operating environment for a lot of our institutional clients?
Right. So we did a webinar in April, and we asked the question in terms of how the operations have been affected for compliance teams, and 96% of them have pointed out that they're working remotely. In some jurisdictions, that's mandatory. You have to work remotely or not at all. In other jurisdictions, you were allowed to still work in the office. So we did see quite a bit of that. Another thing that we thought that was interesting was that there was a heightened monitoring for fraud activity that they had to be performing based on what was happening. So Satya made a comment a few weeks back, and he said what we saw in 2 years of digital transformation, you're now seeing that in the last 2 months. And we're also seeing the same thing where a lot of customers that were quite reluctant to make a lot of big changes and really try to get things to be highly automated. They've been coming to us to say, hey, you know that conversation that we've been having about doing this and implementing real-time monitoring and implementing real-time payment screening or whatever, could we take another look at that? Can we look at having the system go out and interact with remote locations, things like that? So we've seen just a big jump in the level of engagement because now of that virtual working environment, it's no longer a choice. It's either you have to do it to actually survive. So those are some of the things that we have seen.
And Andrew, again, there's a lot of questions coming through, guys, so forgive us, and we will try to get to all of them. But one came through which was just directly relevant, and that is, can you comment on the sort of effectiveness that you've seen of a lot of employees, obviously from the compliance sort of KYC perspective, in a virtual operating environment? Have they been able to be as effective in your experience?
When you look at the calls that we were getting, I would say in the first few weeks, we got a lot of calls, and it was, okay, so how can we enable someone that was physically sitting in a branch before? How can we enable them to start getting the alerts in a remote location? Is it still secure? Are there things that we can do to make sure that we don't have a problem? How do we get the connectivity cleaner, things like that. So we got a lot of those questions in the first few weeks, and human beings were impressive. Like, we can, just find a way to conform to our realities quite well. And that's just like, in the first weeks, just went through the roof. And then after that, it just like died down. It didn't gradually die. It just like stopped after 2 weeks after that. So first 4 weeks up and down. And then since then, everything has really been quite smooth. They have had persons have just become a lot more accustomed to working remotely. If anything, what we've seen is, just looking at when we see requests coming into us, we're seeing longer working hours, which, Kevin, you and I talked about that earlier, that now we're working remotely. It's insane. We're working longer hours and we're stuck to the screen for a long time. So those are the things that we've seen. But the adjustments have been rapid. It hasn't been a gradual adjustment. It has been pretty rapid. Yeah.
That's great. I mean, given how much interest there's been in this topic, because the Q&A just kind of blew up with a few questions on this, Matt, I'm curious if you have any thoughts, just kind of in terms of what you've observed, or maybe just as a professional participating in the space, because there seemed to be a lot of query around, the effectiveness, the continuity. If you have any thoughts, I'd, welcome them.
Yeah, no, I mean, I think, as I said before, I think it's a lot of the plans from a business continuity perspective were in place, and so the adaptation is there. And the banks are always going to do what needs to be done to ensure illicit finance, is mitigated. It's really just a question of adapting to a new environment and having to look at new characteristics and a new way of working. I mean, as you say, we are all trapped in front of our screens for 10 hours a day in the same space with our families. So that does create its own challenges. But it's remarkable, actually, I think in the 2 months, has it only been 2 months, that we've been here, that I think the world has changed and has managed to carry on.
You're right. It doesn't feel like 2 months. It feels like a lifetime, doesn't it? Yes, Andrew?
Yeah, so one of the other things, I just realized this, is that we've also had a lot more customers that reached out to us to start getting what they call just metrics around performance. So how long is it taking for things to happen? What's the turnaround? Are there any bottlenecks? So they've asked for new dashboards and new process flows to kind of see what is happening. Where before you had your compliance team physically sitting in the same area with you, you were not as reliant on that because you thought you could see whether or not someone is actually working. But now there's a bigger reliance on what are the numbers actually saying. So what's the throughput in investigating a potential PEP hit or sanctions hit or whatever? How long is it taking for that to happen? How long are persons taking to remediate certain type of alerts or file SARs or things like that? There's a lot more demand for that type of dashboard and performance type dashboards from us as well. That's one of the things that we've seen.
That's great. I do want to pivot to the policy and the regulatory tone in a little bit, but one more thing I think it's helpful just to cover off quickly. Maybe this is part of what Satya was referring to, but obviously cloud adoption has been a way of life for some time now. It's not necessarily new, whereas before maybe to some extent a luxury or a forward-looking investment, now really a necessity. So what have you seen from a cloud perspective or a cloud adoption perspective, Andrew, that's sort of pertinent in this context?
Yeah, I think that a lot of really good compliance officers or head of compliance, whether you're head of compliance and legal or whatever, or if you're like chief AML officer, CAMLOs, whatever you are, the best ones are those that are operating with full
Okay, it does appear we're having some technical issues.
Sorry, yeah. How about, is that any better?
Please, I think
Hello?
if you could rewind 15 seconds, we have you back now, Andrew. If you could rewind about 15 seconds, and we did lose you for a moment there. Thank you.
All right. Well, that was my practice run, so this one should be better. You didn't hear the practice run, so you got to hear this one a lot better. All right. So my thinking is, and when I interact with CAMLOs and so on, you'd find that the number one thing that helps them to be successful, I think, is they need to be very aware of what the business is trying to do. So you're the CAMLO or you're head of compliance in a bank, you really have to understand the realities that bank faces, that financial institution faces. And so when you're looking at how you design your compliance programs, you need to take that into consideration. And I'll give you an example. If you have a situation where a bank is saying, I need to bring on an additional, say, a new loan program, or maybe even it could be like the PPP program. And they're saying, listen, we need to facilitate this for our customer base, and we can get a lot more customers in that situation. How can we do the KYC in a way that allows us to maximize this opportunity? If you are disconnected from that reality as head of compliance and you are saying, listen, I don't care how you do it, you just need to be compliant, then you're not in the game. You're not at the table. You have to be having those conversations. And so if the business is going through a transformation in general and heading in a particular direction that may include cloud adoption, and you are the head of compliance and you're moving in a different direction, you're not going to be successful. And so why is it that everybody is really talking about cloud adoption as a component of digital transformation? The main reason for that is not that you're outsourcing your data center. It is driven by speed of deployment. The speed of deployment means greater competitive advantage, greater opportunities to drive revenues and profits. And also, it means that a lot of the bottlenecks that you would have had before, meaning that when you go to your IT department, how long they're taking to do things, that goes through the window. And the cloud offers tremendous capabilities around analytics and artificial intelligence that may not be readily available otherwise. The interoperability is also important, and most of you would have seen some of the new approaches around compliance is that the compliance program is fully integrated and wired into the core banking systems and operations. And it is not a second thought, it's not an afterthought, and it's not something that happens after the fact. And that's one of the things that's driving a lot of the cloud adoption in this space, and that will continue. I think 3 years ago, if you asked a lot of companies, will you do this in the cloud? They would say no. Today, not the case. It's when can we move to cloud? When can we do this? That's a different type of consideration that's happening right now, and that's all really going to be for the better.
Thank you, Andrew. That's very helpful. So lots to think about, guys, lots of takeaways. I'm sure all of you, as you're thinking about your programs and some of the adoption that you've been undergoing historically and certainly currently, hopefully that was helpful with some key takeaways there. Matt, I do want to sort of come back to you. So obviously, there's been an incredible amount of change from a programmatic perspective, an operational perspective. And sometimes you wonder, well, what are the regulators thinking? They're obviously feeling a lot of these challenges themselves. They themselves are moving to a virtual operating environment. And historically, for example, the US regime has tended to be fairly active, shall we say, on the regulatory front. And so, is there a change in tone? What are we sort of seeing, hearing from them that maybe you could speak to, sort of frame it up a little bit?
Sure, happy to. So, well, we've already seen, a great deal being done from a regulatory perspective in impacted jurisdictions in relation to the crisis. And there's been, widespread action by governments from new state aid programs to adjustments in prudential rules. But I think in this space, one of the most important developments has been a paper that was published this month by the FATF on COVID, AML, CFT risks and policy responses. So the paper is very good, and it really brings together the international response in one place, and it details a number of the same typology issues we talked about earlier, and it also goes into two other areas of importance in terms of addressing the regulatory implications of the crisis and making sure from an international perspective, because they're able to utilize their FATF network, global FATF network, everyone is really on the same page in terms of what can and in some cases should be done in terms of a response. So I'll just highlight two things. One is the government and the private sector's ability to carry out their AML CFT obligations. And so FATF did note a few things. They noted that including you need to recognize that supervision may need to change, that social distancing has made inspections difficult, and certain reports and requirements have been delayed or may need to be delayed, so regulators and supervisors have to be aware of that. Suspicious transaction reports may change in some ways. Online reporting has continued as usual, they say, though extensions have been granted in some cases. So there has to be, I think, a dialogue from the regulatory and supervisory perspective at the international level and coordinated domestically and regionally on what needs to be done to potentially adapt to the new circumstance that the industry and the public sector is finding themselves in. So guidance from FATF in those areas is very helpful. The second area of guidance that the paper talks about, it outlines several responses that jurisdictions have taken or can consider in order to help reduce risks and threats. And so I think these are very, very important in terms of understanding how to address this both from a public and private sector perspective. So the FATF recommends strengthening communications with the private sector to understand how they're being impacted and ways to minimize impact. It encourages the use of the risk-based approach to CDD and the use of a digital identity, and other important things as well. They're outlined on the slide. And as you can see quite quickly, some jurisdictions have taken action in these areas. The EBA has issued guidance in Europe. FinCEN has as well in the US. And it's important to note that the policy responses may differ across jurisdictions. There may be a need for a different policy response when dealing with emerging market jurisdictions or with small banks, but fundamentally international cooperation, coordination, and communication is still vital. And that'll become even more apparent, I think, as the crisis evolves and regulators consider further actions in this area if warranted. But certainly things like that international connectivity that the FATF has given, I think will be very, very helpful in getting everyone on the same page in terms of the response.
So, Matt, it doesn't necessarily feel like there's a fundamentally, tangential sort of response from the regulators. It really feels like a lot of the trends or the confluence of these that have been playing out over the last number of years are sort of almost continuing on, but obviously in light of the recent developments and the recent disruption. So no surprises in a sense here, but that's really, really helpful. Really, really appreciate you taking us through that. And so, I think as we think about, okay, this is a new environment, new normal. I think one of the questions that's often wondered is, where do we go from here? So what can we expect moving forward potentially? And so, I think as in reflecting on that, maybe Matt, if I could sort of bring you in again, what should we look forward to from a financial flow perspective? What are some of the trends that maybe haven't yet fully materialized or played out just yet that we could anticipate?
Yeah, sure. So, it's still very early, I think, in the crisis to anticipate changes for the long term and really, fully unpick related changes to financial flows from other factors. But there are probably, I would say, 4 areas to keep an eye on. So, number one, the use of cash. So it's already been in decline over the last several years, and high-value notes obviously have been slowly phased out in many jurisdictions. But it's an open question, really, how the crisis will impact this area. So from our perspective in the IIF report we did, we noted that some banks and some regions are seeing a greater shift in transactions online as physical cash may be perceived to carry the virus. There's concerns there about any sort of physical contact, including contact with other person's material. So that might have moved a lot of things online. But the FATF report, they noted that there had been an increased use of cash due to concerns for the financial system stability. So really keeping an eye on that. Obviously, cash has implications, especially high-value notes, for financial criminality. So whether you're going to see a shift away from cash and mixing new flows on the online environment, that's something that has to be, I think, kept an eye on. The second area would be financial flows, I think, in the use of aid programs. So obviously, there's been a spike in support programs, many of which are facilitated by banks through guarantees and other mechanisms. So it'll be important, I think, to keep an eye out for how financial flows and financial activity responds to this. So, for instance, just as an example, some increases in online payments and money transfers, they're legitimate changes in customer behavior owing to the crisis. You see small increases in remittance transfers to regions that are economically impacted by the pandemic, where people aren't working, they're out of the job, and so their relatives in other areas may need to send more money at this time. Or there might be deposits arising in banks from government support schemes that don't match the pattern of usual customer behavior. So those could be legitimate. However, there may be others that are linked to illicit flows, insider trading, proceeds of corruption, misuse of these aid programs. So there has to be, I think, a review of that differentiation in financial patterns. That'll be important. The third thing, I think, is the new supply chains and new customers. I think we've touched on this earlier as well. So the crisis has seen really old businesses close in some cases, maybe permanently, and new businesses start. So going forward, it will be important for banks to deal with new customers in really what has become a disrupted supply chain and assess risk with those changing patterns of behavior. And that's compounded, obviously, by social distancing. It's a delicate balance in how you review customers while ensuring much needed funds flow to the real economy and through these different types of programs. So, and just making sure you actually know the new customers and how that is dealt with. That's going to be, I think, something new for financial flows. And that also leads to, I think, my fourth point on new technology. And I think you'll see a continued uptick in the use of digital identity and e-onboarding and e-maintenance of client options in the future. They were expanding, obviously, before the crisis, and they'll expand, I think, even more. And there's also, I think, a likely further focus on machine learning and AI to track patterns and assist with risk management in this particular area. So I think those 4 patterns in relation to financial flows and characteristics, et cetera, is something to keep an eye on in the new environment.
Thanks, Matt. That's really helpful. I'm glad you mentioned supply chains, and some of the other contexts as well. Shameless plug, we did a number of webinars leading up to the last number of weeks around supply chain, around third-party risk, beyond just perhaps the KYC sort of AML context. So if those are areas that interest you, we can definitely, we would love to sort of connect with you on that basis as well and have recordings and content available with respect to those as well. I think your remarks around technology were very helpful, and I might offer a segue there as well, because Andrew, I think as we think about this moving forward, obviously technology, as we've talked about, has a big role to play as well. So what would you recommend, going forward with this backdrop in mind, we should be thinking about? What kind of operations, tech program drivers should we start to accelerate, continue with, et cetera?
Yeah, so prior to this webinar, I had a staff meeting and I had everyone virtually online. And one of the big questions is, okay, so Andrew, what's the future? What does the future hold? Like, what's going to happen? It's $1 million question, right? $1 billion question if depending on the industry that you're in. But the issue is that right now you just have to look at what has happened, what has changed. You can guess about what's going to happen going forward, but more so, I think you should probably look at this as a lot of it as a new norm. And some of the things that you were doing last year and the year before, it's never going to be like that ever again. And there are questions about ID verification and online identity verification. Some of the challenges with this too is that in some jurisdictions, the data is there, the access to the information is there, and it is very easy. In other jurisdictions, because I'm assuming that we have persons on this webinar from all over the world, there are concerns and risks and constraints around privacy. There are constraints around just the availability of the information. If you look at in North America, you can actually just validate somebody's address quite easily. In some developing countries, it doesn't really work like that. So there's a bit of a difference, and governments are going to have to figure out how they're going to handle that. But ID verification, doing all the virtual onboarding, as Matt said, that's going to be really, really key. I talked about AI as well, and just how you're going to have to recognize that models have changed. But we've also seen some customers that have started to tweak things a little bit more around what they're doing with payment screening, sanction screening as well, and any kind of watch lists, recalibrating things and making some slight changes. We've seen that. And really being able to get down in the depth of UBO, understanding who the ultimate beneficial owners are for certain businesses and trying to understand the underlying risks there. That's also critical. And that's also, again, driven by jurisdiction and the availability of data. And one of the other things is really just if you're going to get new suppliers because your business have changed and all of that, and if those are key suppliers for your success going forward, you may really want to do some level of enhanced due diligence there. And there are technologies that drives enhanced due diligence that you might want to also look at. So those are some of the big things that you need to look at, and some of the technology drivers that you may want to be leveraging.
Thank you, Andrew. That's really helpful. And a number of those questions had come up actually in the Q&A, so I'm glad you brought up digital identity verification, a number of other factors. I would like to give us the opportunity to answer a couple of questions, and again, it'll just be a couple out of a whole bunch, but we will get back to you, so please be patient with us. Before I do that, any last sort of closing comments or thoughts, because I think we've already packed in a lot of key takeaways and next steps. Matt, any last remarks from you to kind of close us out and give everyone a couple of things to think about?
Yeah, no, sure. So, I mean, we've outlined really a couple areas of next steps which could be beneficial, and they're largely in line with what the FATF has said in many key areas. And I think it's important, this kind of loops back to the whole original conversation around effectiveness. A lot of the issues that would help in this environment improve effectiveness is not really new. They've been around for a while, but certainly the COVID circumstance creates perhaps a sense of urgency that could help catalyze some of the responses in this area. So first, really, I think, focus around international cooperation and AML-CFT, really supporting the drive by the FATF to coordinate guidance and what guidance should look like and collectively identify challenges and good practices. I think the more the world is on the same page in what is essentially just a cross-border problem, financial crime. Financial criminals don't really, respect borders, the better the response is going to be. I think the second really is to really ensure clear communication, prioritization at the national and regional level. again, this idea of clear guidance, forbearance where necessary, communication of regulatory expectations, all of these things is going to be very, very important in how the response is handled. And then third and fourth really are old chestnuts in this area. It's really improving information sharing. So it's allowing information on financial crime related activity to be shared enterprise-wide within banks, bank to bank, bank to government, and government to government in both directions. It's critical in order to actually mitigate a lot of the criminal activity in the financial system, to understand where that activity actually is. And that's going to be very true as you're getting to new emerging characteristics and patterns related to COVID. And then tied into that is really public-private cooperation. You really do need to have these mechanisms in place, like the GIMLET in the UK, like the Europol's financial intelligence public-private partnership, where you can bring together the public and the private sector together to share typologies, to share geographic indicators, and where possible to share tactical level information within the constraints of the law to really get to where you need to in terms of finding this illicit activity. And then just emphasize again, technology. It's going to be very, very important going forward in this new environment. So finding ways for regulatory support for digital IT systems, new forms of eKYC, all of that is very, very essential. And then just lastly, just one last thought. I think it's going to be really important to take a post-mortem look at this crisis to see what worked well, what changes were made, what worked, and what we can learn in terms of sound practices to make a more effective anti-financial crime framework. I think we've been thrown into a whole new environment. I think we can really learn some lessons from this on how to make the system more effective.
Thank you, Matt. In a minute or less, Andrew, any last thoughts from you, just to kind of close things up?
I think Matt did an excellent job of putting all the takeaways together. The only thing I would say, though, is, and not just for people in compliance, but everyone, I think it's really important that you have consistent and continuous communication, and also just a lot of awareness and training amongst your team. A lot of the scams, they're being successful because people are just not aware that this is something that I should be worried about. So from a compliance standpoint, I think that you just need to continue to educate not only your team, but people on the front line, all the different lines of defense. You need to be driving more education, more communication going back to them. I think that's a very good way of handling it. And I know persons would think that I'm just going to say technology, 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 but honestly, just awareness is probably one of the biggest weapons that you have right now, just kind of making people be more defensive about what they're doing.
That's great. Thank you, guys. We're going to get to a couple of questions quickly. And again, forgive us if we don't get to yours. You've been pinging us throughout the presentation, which we really appreciate because it means you're engaged and we're very happy to answer you. One of them that I'll pull out from here, from a bunch of great questions, is it the regulator's expectation, and maybe Matt, I don't know if you want to comment, or Andrew, of course, that financial institutions should conduct an assessment on transactions or typology changes now during COVID-19, and then come up with adjusted monitoring mechanisms accordingly? Is that the expectation? Do you guys, can either of you potentially speak to that?
I could take a shot. In terms of the transaction warranting typologies that you're seeing, I think that you shouldn't go off and start to just start ripping everything out just like that. I think you need a little bit more time. In terms of a lot of the behavioral models that you have implemented, you have to be careful about retraining to deal with this specific situation, because the new norm is not so much what happened in March and April. It more than likely is going to be what is happening in June going forward. So I think you have to be careful of that. But at the same time, you may want to, depending on the sophistication that you have in it, if you can just adjust the scoring mechanisms around the behavioral anomalies. You can get that to get some noise out, and probably just more focus and get a greater priority on the things that definitively these are things that we should be concerned about. So that would be one of the things that I think you should be more concerned with right now, because you don't want to make a change that's not going to go well in the future.
Thank you. And
I think that's right. That's right.
Go ahead, Matt. No, please go ahead.
No, I think that's right. And I think it's also, as both the banks and the public sector are seeing these new typologies, communicating them effectively, and understanding them both from the bank's perspective and then from law enforcement, I think will be a start, and then we can go from there.
That's great. In 30 seconds or less, because I saw a couple of questions about fraud, have we seen, and somebody calls out here that we have seen increased scams, increased instances of fraud, many of them targeting the most vulnerable, like senior citizens. Is that being addressed somehow by banks, regulators, or otherwise that you've seen? I know we spoke to fraud instances from the distribution of funds through government programs, but maybe in other contexts as well.
Look, the matter of elders being targeted that's always been the case. Almost every risk model that you have implemented in any financial institution classify elders as a risk factor. So that's not changed. I don't think that there is a big change with that. So if you were classifying them as a higher risk before, you should still be classifying them that way right now.
That's great. All right, guys. So I just wanted to say thank you to both of you sincerely for joining us, for sharing your wisdom and perspectives. We're really, really glad to have you join us. And of course, all of you that attended. We love the engagement. We love the questions. We're going to try and get to every single one. I said it 5 times, and we really mean it. So we're excited to have you join us for this new series. And I hope it reflects the engagement that we're sort of driving here during this strange time. And we hope you can join us for the next one. So Stephanie, I'm going to pass back to you with thanks and appreciation to all.
Thank you, Kevin and Matthew and Andrew, for your compelling presentation today. Before we conclude, I want to say we value your input, and we really appreciate if everyone could take a moment before you leave and answer the survey that appears at the bottom right corner of your audience console. We use the information there to help build out our further webinar programs throughout the year. And again, I'd like to thank our speakers and the audience for your time and interest today. And again, you will receive a copy of the recorded webcast, the slides, and other resources following the webinar. You can also access the recorded webcast on demand using the same audience link you used today. And please do fill out the survey. This concludes today's webinar.